All right, hello everybody. I'm Nick Findler. I'm the investment relations manager at Skyharbour Resources. We're a uranium exploration company, Athabasca Basin. We've been at it for about 4.5 years now. Saw an opportunity in a depressed market to basically start building an asset base. That's culminated in 5 projects now, 200,000 hectares spread across the basin, both on the west side where you have the discoveries such as NextEd and Fission, and on the east side where you have the historical mines and the infrastructure. So if you take one thing away from the presentation today, that's a 3-letter acronym that we think is the key to success. That's PTP. It's people, timing, and projects. The people obviously being the management team, the directors, the geologists, really all the people that go into it. The timing is really surrounding the uranium market, where we think we're at in the cycle, what are some of the catalysts that are going to push the price up and inevitably push the price of the equities up, and the projects. So that's the 5 projects we've acquired now, the drill programs we're doing there, and the different partners that we've acquired over the last couple of years. So, as I mentioned, I'm the investor relations manager of the company. I've been with the company for a few years now, and I work right alongside Jordan Trimble, who many of you may know. Jordan's the CEO of the company. Prior to Skyharbour, he was involved in running a company called Bayfield Ventures. Bayfield was a gold exploration company in the Rainy River. They made a high-grade gold discovery. They managed to sell the company to New Gold. That was about 4.5 years ago, just prior to when Jordan started Skyharbour. The second guy on the list there is our head geologist named Rick Kazmersky, or as many of us know him as Radioactive Rick. Rick's been in the industry for 40 years now, true veteran, made many high-grade discoveries. He was the head exploration manager at Cameco for 15 years, and then went on to run a company called J&R Resources that was eventually sold to Denison Mines. So that leads me into the guy at the bottom of the screen, who you see there is Dave Cates. Dave's the CEO of Denison Mines. Denison Mines is our largest strategic shareholder. They hold about 10% of the company, and really Dave's been a really big part of our team since coming on a couple years ago, and really a very savvy guy in the space, and someone great to shoot ideas off of. And then last but not least, a name pretty familiar to this scene is Paul Matizik. Paul's a true company builder. Over the last 10 years, he's sold 5 businesses for an aggregate of $2.5 billion, the largest of which being a uranium company called Energy Metals Corp. He took it from a $10 million valuation in 2004 and sold it for $1.8 billion in 2007. So, that's really what we're looking to do here at Skyharbour, is have that exploration success, find the next discovery in the basin, and then with any luck we get the uranium market moving in the right way. I think we've got the keys to success here. So here's a little bit on the share structure. We've got 55 million shares out. There's about 1.3 to 1.5 in the till right now. We've just wrapped up a drill program that we'll have results out in the next couple weeks on. At the bottom here, you can note some of the strategic shareholders. You've got Marin Katusa and his fund, the KCR Fund. They've been a cornerstone investor since day one. And then you've got Denison Mines as a reporting insider, 10%. Paul Matizik, Doug Casey, Jeff Phillips, and then there's a couple institutional funds from Hungary that have been with us for some time now. So we're definitely a retail predominant traded stock, but we have had a lot more institutional investment and interest over the last couple years. So we're definitely starting to see the story shift. So now the second letter, so we had the people, now we'll talk about the timing in the uranium market, and that's kind of the million-dollar question that a lot of people ask is, when is it going to turn, and what are we looking at over the next couple years? So, what I think is interesting is to, sort of separate it to 2 different sides. We've got, the supply side and the demand side. So from the supply side, we've seen some very interesting happenings over the last 3 or 4 months. We had Kazakhstan, who is the world's largest supplier of uranium. They supply about 40% of the world's supply. They've just agreed to a 20% production cut over the next 3 years. And then you look at Cameco, which is Canada's blue chip uranium stock. They've just shut down all operations at the McArthur River mine, which is the largest mine globally. So between those two production cuts, you're taking off upwards of 20% of the world's supply. So a lot of these low cost curve producers are starting to come offline. I think we start to see the price of these contracts starting to move up. From what we've heard from different negotiations, that this is already underway, and you're starting to see it reflect in some of the share prices. You've seen Cameco's trading at a 52-week high. So I think it's just a matter of time before we start to see those contracts being entered into. The utilities buyers have been sitting on their hands for quite a bit of time now, but I think they're back at the table. So I think we're starting to see a little bit of momentum in the space, and then really that's all it takes. If you look back to 2004, you had a eerily similar situation where uranium was trading at $20 a pound. Fast forward 3 years later, you're trading at $136 a pound, and every equity was doing big multiples at that point. So we're hoping we have something similar. And then on the demand side, demand's coming from really the developing world here. It's China that's leading that rush. 57 reactors currently under construction. 21 of them are in China. These are big reactors that need a lot of uranium, especially in the first year of operations. They're needing to get to that critical mass. So as these start to turn on, and we're going to see a lot more uranium needed. And with these supply cuts, I think we've got a coiled spring that's ready to go. So now the third P here, that's the projects. We've been building the project base now since inception. As you can see here, we've got our 5 projects. Our flagship is Moore Lake, that's on the east side, where all the infrastructure is and the mills and that such. And then on the west side near NextGen and Fission's big discoveries, we have our Preston project, which we just brought in partner companies on that I'll talk about in a second. So Moore is our flagship. We acquired it from Denison. We're earning into it. We just completed the work exploration part of that. That was $3.5 million to earn 100% of it. It is a clawback deal. It's a little bit complex, so if any of you have any questions on it, it's in our PowerPoint, or you can come see me at the booth. We just completed a drill program. The core's in the lab right now, so we'll have results on that in the next couple weeks. We're planning to do another summer drill program this summer. And we're having some excellent results out of Moore. We had a 21% drill hole over 1.5 meters. You're having 9% over a couple meters. So you're really having some really big results, and we're sort of seeing this pearls on a string model. We're having these high grade pods that are really starting to show themselves. So we're very excited about this project, and it's definitely our flagship. We'll move on to Preston. Preston's the project that's on the west side. Our secondary strategy at Skyharbour, outside of having that drill success and looking for the next big deposit, is what's called the prospect generator model. We're looking to bring in partner companies to fund the work. We've done this on Preston. We brought in industry leader Areva, who's now called Orano. They've committed to half the project, and then Azincourt Energy has also signed an option agreement with us. So between the two deals, it's $11.5 million over the next 4 or 5 years, 1.7 million in cash, and about 9.5 in work. So that's something that we're really excited about. We're looking to bring in other partners on our 3 other projects. And then that leads us into our project Falcon Point. We're actively looking for partner companies on that. We do have an NI 43-101, 7 million pounds. It's close to surface, lower grade, and actually one of the highest grade surface showings that we've ever seen in the basin of 68% U3O8. So it's, if we hadn't acquired more, this would probably be the project that we'd be working on, and that kind of rounds out the project. Here's a stock chart from the last year or so. We're trading around 40 cents, about a 22 million market cap. And if anyone has any more questions, please feel free to come visit me at booth 301, and thanks everyone for your time.